Welcome to our podcast, To Be or Not to Be, from blockchain to Bitcoin and everything in between. We explore the world of crypto and digital assets. We ask simple questions and help you find the answers by talking to business experts, academics, and experienced finance professionals.
And now I'd really like to introduce Jamie Knowles. You're from the Smarter Web company. And people may notice if they're watching this as a video that I've also got the Smarter Web company hat on, and that's because I'm an investor. But I really wanted to speak to you today, Jamie, because you recently joined the company.
Yes, that's correct. So I joined 2 weeks ago, and first of all, I wanted to say thank you very much for having me on the podcast. As I said to you before, you've done an amazing job in trying to help promote awareness of not just Smarter Web, but also Bitcoin and the value proposition for Bitcoin Treasury companies, where there's still a lot of work to be done. So was really looking forward to being on the podcast today. But to go back to your question, yes, I joined 2 weeks ago in the official role of Head of Capital Markets. So maybe a couple of points to start on would be, what is my role? How did I end up getting to that role, and what had been my history before that? So
Brilliant.
starting with the last one, I've been working in financial markets for close to 20 years now. I'd sort of been working with a combination of about 16 years in traditional investment banking, which was really on the equity sales trading side. I worked at Bank of America, Credit Suisse, and JP Morgan, and really my focus was on helping hedge funds execute orders in stocks and in derivatives, particularly larger size ones where they needed some form of bespoke execution. In about 2018, I started getting into Bitcoin personally. And in about 2022, I wanted to transition full time into digital assets. So I left Bank of America to join Galaxy, which is a NASDAQ listed digital asset firm, to help them build out their distribution of their markets business in Europe. I was there for about 2 years, and during that time it was particularly difficult because it was just post Luna and ran straight into FTX. So that was when Bitcoin went down from 65k to 13k, and it was a really challenging time for the sentiment. But one of the takeaways from that is that it really increased my resilience in understanding Bitcoin's cyclicality, that the industry does move in cycles. And that's been particularly important for me during the course of the last 6 months, where naturally, just sentiment has been a little bit tricky, and naturally people do get skeptical and there is a little bit of apprehension around. And then after Galaxy, I spent 2 years setting up my own consultancy business focused on digital assets with another ex-Galaxy colleague of mine. And during that period, I started to get to know Andrew, but it really sprouted from the IPO. So I was an investor in the IPO in April of last year, and post that I started having some conversations with Andrew just in terms of the fundraisings, where I was getting active in, like everyone, in terms of the retail wrap offers, and then also just in terms of providing some sort of shareholder advice and ideas. And then at the back end of last year, I started doing some work for him in a more formal capacity where he needed some help for someone that was London based. And at the end of that consultancy period, he asked me if I would have any interest in coming and working for him full time in the role of head of capital markets. So I was over the moon. I was very pleased to accept. One of the things that did make it much easier for me was the support of my business partner, who knew how involved and invested I was in Smarter Web. And that made the whole process a lot easier. And really what my role is I have two core responsibilities. The first is the investor relations part, which is managing our current and existing investors to make sure they understand our equity narrative, what our performance has been, what our strategy is. And then the second part is related to the cap market strategy. And that's really about developing and managing relationships with anyone that goes into the capital markets process. So that can be banks, investment banks, lawyers, legal advisors, external advisors, and all of those to help them come together so that at the right time we're able to raise capital in the appropriate manner.
Hey, well, that's that's a great overview of really just how the last 2 weeks actually hasn't been just 2 weeks. It's been since IPO that you've really got to understand and know the company as well as an operating business that has Bitcoin on the balance sheet. And I think it's such a new area that we need to have more of these conversations. But if I then let the audience know that one of the reasons that you came to my attention is because of all the knowledge and the wealth of knowledge that you've shared over the last few months, in our community, in the X community. So I think an awful lot of us, when we heard that you were coming on board officially, music to our ears, because we know that you're based in London, you've worked in the city, like you've just said, all of the banks that are huge, that make the capital market. You've pounded the streets, you've done the presentations, you've been on the trading floor. So yeah, it's a great introduction to why I'm speaking to you today. And I have a couple of sort of standard questions that I like to ask everybody now, or at least I think as the podcast evolves, I'll be asking everybody, because we are as a podcast called to be or not to be. So from blockchain to Bitcoin and everything in between, it's really a case of where do you stand on that spectrum?
Yes. Well, so it's a big question.
Yeah.
So, exactly. The first thing I would say is, so from where I am at the moment in my role, it is very Bitcoin focused only. But, taking a step back, when I was working at Galaxy, which is arguably sort of the largest investment bank within crypto, I was able to get a pretty good overview of sort of the blockchain, crypto, digital asset industry. And one of the things really to sort of flag, first of all, is that people do tend to use the terms interchangeably, which has its benefits and it also has its drawbacks as well. But one of the things that I've noticed, certainly with institutions, is that they're really starting to position or frame the narrative more by using digital assets as the term rather than cryptography or crypto. When I think about crypto, I always think about the underlying technology, which is cryptography, which is how the ability to record and transfer data securely. It allows two parties that don't know each other to transact on an open network. And then the digital assets are the instruments that are based on top of that blockchain layer. And obviously the blockchain is the ledger that stores all the information and the data. And so when I think about crypto, I think about it as the sort of the security technology, and then digital assets as that being built on top of it. And then so when you ask me from my perspective where I stand, looking at it from an institutional lens, the way that I think about it has really been that the industry has evolved probably through four cycles, whereby you had 2013 to 2016, you had a lot of investment banks that were looking to explore how blockchain could be integrated. There was no demand to do anything related to Bitcoin. A lot of people still had negative things to say about Bitcoin, and it was really about how can we integrate blockchain technology into an investment bank or into a traditional bank. And that was really focusing on things like enterprise blockchain, which really failed to scale. And then about 2017 to 2020, the banks started to focus on infrastructure and custody. And so you started to see people saying, right, we don't want to have a build around the blockchain, but we want to have the infrastructure that may be related to certain parts of that. And then in 2020 to 2023, you started to see trading and custody really develop. And that was driven primarily by client demand. So that was when you started to see investment banks offering things like futures trading. You started to see investment banks starting to offer custody. And that was at the point where I made the pivot from going from traditional finance, investment banking, into crypto full time, because there was a big demand for these crypto native investment banks to say, hey, you have relationships with people that want to trade digital assets, but you can't do it at your investment bank. Can you bring those relationships over and we can facilitate that on our platform? Obviously, like I said, it was made particularly difficult just what happened in the sector, particularly in 2022. But the final part of this sort of four-stage evolution has been 2024 to present, where it's really been focused on tokenization and digital asset infrastructure, particularly with reference to how it's integrated into traditional finance. So that would be things like BlackRock with their tokenized money market funds, and crypto hedge funds being able to use those tokenized money market funds as collateral. We've had the ETFs coming through. We're now having structured products being built on ETFs. So when I look at it, and when you ask me where am I in the spectrum, I'm
Yeah.
very much at I see it through the institutional lens, but particularly focused on Bitcoin. And one of the key takeaways from me during my whole time sort of in the sector has been that I think there's going to be a continued shift towards doing more Bitcoin focused work. And that a lot of that tail will the tail will continue to become longer. So Bitcoin as a proportion of the overall industry will continue to strengthen as an overall proportion.
Yeah, I mean, again, fantastic knowledge that you've got on the ecosystem of how it's building, and because most people accept money as it's a form of transaction. We get our services and our goods, and it's our time and energy that goes into it. But nobody ever thinks really about all of these complex layers that make up this financial system that we've got. So you've seen the framework, you've worked globally in terms of these banks that are based in London, but they're all over the world. But there's a point where you did pivot. There was something that made you look at Bitcoin and the crypto space, and you differentiated between a cryptocurrency and a tokenization of, or a meme coin, or that whole system. How did you differentiate that Bitcoin was different?
It's a very good question. I have to be completely honest. At that particular time, I wasn't. So I would call myself now a Bitcoin maxi, and I feel very confident saying that. But to be honest, back in 2022 and before, I probably wasn't. And like most people, when they come into digital assets again, or crypto, if you want to call it that, they start with just trying everything. You know, everyone tries a different flavor of something, and it's particularly easier now, just given how easy it is to go onto your phone and have a complete menu of things to trade, of themes to express, and it's much easier at that time. Now, at that time, being in finance, different people were talking about different things, and for a large part of that bull market, you're really just chasing momentum, which is anything that's winning. And so it was natural for people, both retail and institutions, just to be jumping on what was hot. One minute it was play to earn gaming. One minute it was NFTs. The next minute it was, proof of stake with Ethereum. Then it was proof of work with Bitcoin. And then it could have been some other themes. So over time, what you tend to learn is what has longevity. And the key thing for me that you've learned, or that I've learned, is the fact that the longevity is really, for Bitcoin, is really solidified by just the sort of the global macro case. And that for me has been particularly convincing. Like I said, sitting at an investment bank on a trading floor, you get a front row seat to literally being like on the pulse of what's going on in the markets. And the one consistent theme has been, global debasement of currencies. And I think that's going to be an ongoing theme for some time. It remains, a core part of our thesis internally, which we talk about consistently with both Jesse and Andrew. And it's why, even though things can feel difficult for Bitcoin in the short term, longer term, if you think government spending is going to go up, if you think it's going to be hard for governments to get out of that debt, then debasement will continue. And as a result, there will be a place for Bitcoin in the future, and subsequently Bitcoin Treasury companies. So a long-winded way of answering your thing. Initially, I wasn't full in, or I didn't have a full commitment, but now 100% maxi, and feel very confident to be publicly on the tape saying that.
Yeah, and I'm also going to say likewise, because even though I heard about Bitcoin back in 2011, it's another story for another day. I'm a Bitcoin maximalist, and that tended to be where people held in their own storage, their own private key. It wasn't heard of to be on the balance sheet of a public company. And yet that's all changed in the last couple of years. And again, like you've just said, Andrew Webley has, in the UK, spearheaded this. And it's really pioneering, because even though it's been done in America, and we know Mr. Michael Saylor of Strategy is incredibly successful with this formula, we hadn't really had anything in the UK. And it was Andrew that decided, well, if nobody else is doing it, I'll do it. How did you find out then about the IPO, or even about Smarter Web?
Yes, I have to be honest, I was lucky to be on the AJ Bell distribution list when the IPO was announced. And I've been following the Bitcoin Treasury space for some time, having been an investor and still an investor in Strategy. Only two that I own are Strategy and Smarter Web. And I saw there'd been a little bit of press around Smarter Web, and subsequently from there was able to get into the IPO. But I think you're right, Alison. It's a very new concept, and it's particularly frustrating because, the UK, we have many great things to be proud of, but one of the things that has been frustrating has been the fact around the adoption rate around digital assets has been particularly slow, especially versus other developed countries. For instance, we still don't have an ETF. There's still specific regulations. There's a real big a structural market access problem for a lot of institutions that want to get exposure to that. And it's only really in the last 12 months that you've been able to, or maybe a little bit longer, that you've been able to sort of go onto your phone and buy it through your banking app. Previously, the banking system made it difficult, and if you're an institution, especially with a UK only mandate, there wasn't any other way to get Bitcoin exposure or an expression to that debasement trade. So this is all very, very new, and certainly that's a large part of my job working with Andrew and Jesse, is to make sure that people understand, the value proposition that we have at Smarter Web.
Yeah, absolutely. And again, not forgetting that it's an operating business that was a successful internet design company in SEO, and from there, it's for us as investors. We forget that there is a successful operating business, and we just literally are focused on what Bitcoin is doing. And I've taken a view that because it's a long-term investment, I'm not worried about, the price. And I don't really talk about the price a great deal. Something that traders do, and that the retail public expect, is some sort of projections. And this is where Bitcoin doesn't always do what you think it's going to do. It's
Yes.
17 years old now, brand new compared to other assets. And it's like a child to me. It's growing up in front of our very eyes.
Yes.
So how have you sort of followed that journey and looked at what Bitcoin can do for a business?
Yes. So I think you make a really good analogy with it being similar to how a child behaves. And when I was at Galaxy, I used to sit behind our mining team, who are like the hardcore Bitcoin OGs. And they used to use that sort of analogy consistently to say that its behavior, since inception, had very much been similar to a child's, where it's unpredictable, irrational. Now, as it's coming into its 17 to 18 years, it's analogous to, okay, it's coming into a late teenager stage. Sure, it behaves irrationally, but it's a little bit more predictable, i.e. realized volatility has been coming down over time. Then it will get to 21 and then years old, and then it will start to, continue to develop. The realized volatility will continue to come down. It'll be integrated into more, the broader financial system, etc. So I do think that's a really good way to think about it. I think to come back to your final point in terms of how do we think about it in terms of the corporate balance sheet, you make a really good point, because one of the key things for us is to explain to corporates in the UK, both public and private, why Bitcoin can be a value additive and is a value additive store of value on their balance sheet. And it's very important to remind people that Smarter Web started off as a web design business with a 15-year history before pivoting to the current strategy. They've been taking payment in Bitcoin for a few years prior. And one of the things that we consistently have conversations on and hear feedback is that there are a lot of companies out there sat on cash that don't know what to do with it, or don't know how to or where to invest it. So we do a lot of sort of educational work, or sort of formal or informal thought leadership around that. There's other great people within the UK that are doing further work on that as well. So it's a collective effort. But from our perspective, and that's why the conference that we're going to be having at the end of May is so important, because it will be a great platform for people to come and understand why Bitcoin on a corporate balance sheet is important. If you think that inflation is going to continue to rise at varying degrees, then this is a strong, again, not financial advice here, way to protect against inflation. That's a lot of the work that we have to do, particularly around advising other sort of public and private companies.
Yeah, absolutely. And I think this year is going to be really important as well. So I'm just pleased that you just mentioned that, because I think over the next few weeks, I'm probably going to do quite a lot of work to promote that conference. I think it's going to be pivotal in getting, like you say, CEOs of businesses and company directors of businesses, small to medium enterprises like Andrew had, and seeing just how that balance sheet can grow if you take that long-term view on Bitcoin. So it's a real big education piece. So for me, you're vitally important in this space, because again, you're bridging. Well, I want to document what you guys are doing. And I also, because I've worked in construction and finance insofar as asking for the money, not being the person that provides the money, but saying this is the project that I've got and this is the returns it's going to give you, and seeing cycles within the real estate markets and understanding just how important money is. But then, like you said, seeing the debasement of currencies and seeing how people's lives are affected. To me, there's a big education piece to just understand what happens in the markets. And I wanted to get involved through Bitcoin, not through traditional finance. So our people will start to understand that Bitcoin can solve a lot of problems, not every problem. But I would, in sort of summarizing with you, say I'd love to continue this conversation. I think when you're passionate about something and you understand it and you want to convey that, we could potentially make another podcast or two later in the year.
You do a great job in getting a wide variety of different speakers. Like you had Scott on recently from Connecting Excellence, and within the UK, I think we've got a pretty good group of people advocating, all in their own unique way and all within their sort of specific niche of people that they talk to about why Bitcoin's important, how it can be integrated into traditional finance or sort of broader systems. And I think we've got a very good collective voice here in the UK. And now it's just about trying to get in front of the right people so that we can have more understand the message.
Yeah, absolutely. Well, I'd love to take a deeper dive for, like you say, your audience as well, because I want them to be able to listen to what's happening within the ecosystem. They know it's growing. We know it's growing. We know that the traditional and the decentralized finance is coming together. There are layers that are working together and coexisting. So, Jamie, and so I just want to say thank you so much for your time today. and I'm sure you're giving people lots of food for thought. And if there's any questions that people want to ask us, then yeah, hopefully we'll get the feedback and I can come back to you and we'll cover more of the subject.
Perfect. Well, thank you very much for having me, Alison. And like I say, you do a great job of spreading the message as well. So I look forward to coming back in the near future.
Great. Thank you so much. Thanks, Jamie.
Thank you for listening. This was To Be or Not to Be, from blockchain to Bitcoin and everything in between. If you enjoyed this episode, please subscribe and comment. We would love to hear your feedback and make this podcast better by answering your questions.
This podcast is for information and entertainment purposes only and does not constitute financial, investment, legal, tax, or any other form of professional advice. Nothing in this episode, or any other, should be taken as a recommendation, endorsement, or invitation to buy, sell, or hold any cryptocurrency, tokenized asset, or other investment, or to engage in any specific strategy. Views expressed by the hosts and guests are personal opinions only and do not represent the views of any organizations they are affiliated with. The content may be inaccurate, incomplete, or become outdated at any time, and no liability is accepted for any loss or damage arising from reliance on it. Listeners should always do their own research and seek advice from an appropriately regulated professional before making any financial decisions.